Hims and Hers shares surged 40% following a landmark partnership with Novo Nordisk. This agreement potentially settling major litigations and adds branded Wegovy to the platform on Hims, offsetting a prior monthly decline of over 30%. Analysts project 2026 revenue between 2.7 and 2.9 billion for Hims. The relationship between Hims and Novo Nordisk has been turbulent to say the least. Is Hims stock a buy after this restoration and partnership? Let's find out together. Both Hims and Novo Nordisk benefit from this renewed relationship. Hims can sell Novo's weight loss drug and bring in new users, while Novo is able to reach more patients through Hims' tech-savvy platform. Novo NVO stock has been declining ever since 2024. Novo is facing competition in the weight loss game. Eli Lilly has Zepbound, which has shown better weight loss results in clinical trials in some cases. Novo also faced political pressure in the US to lower its prices, which were significantly higher than in Europe. Plus, the stock price for Novo Nordisk was propped up because of demand outpacing supply for the drug. So Novo will benefit by partnering with Hims to reach more clients and generate more sales. So what is this shortage that I'm referring to? The surge in popularity of Ozempic and Wegovy in 2022 and 2023 was so massive that Novo Nordisk simply couldn't make enough pens. Wegovy and Ozempic was added to the FDA shortage list in March 2022. Also, Zepbound added in December 2022. For nearly 3 years, this was the Wild West of weight loss, where Hims and others built massive businesses selling these compounded alternatives to these name brand drugs. The problem with Hims started when Novo Nordisk and Eli Lilly finally fixed their supply chain issues. On February 21st, 2025, the FDA officially declared that semaglutide shortage was finally resolved. The declaration of the shortage end made compounding, quote unquote, illegal. There's also a grace period. The FDA gave pharmacies 60 to 90-day grace period to stop production. By May 22, 2025, the shortage loophole was finally closed. Once the shortage ended, Hims tried to stay in the compound game by using a different argument, personalization. They claimed that by adding ingredients like vitamin B12 and changing the dosage, they weren't making copies, but actually personalized medications, which is separate legal protection. However, Big Pharma was not buying this, nor was the FDA. They argued that they were differences designed to bypass patents. This led directly to the FDA warning letters and Novo Nordisk lawsuits against Hims. February 9th, 2026, following intense FDA backlash and a direct patent infringement lawsuit from Novo, Hims canceled the launch of its cheap pill alternative. In February 2026 as well, Hims stock hits a death cross and falls towards $13 a share as investors fear the GLP-1 revenue stream was officially over. However, things started to turn around for Hims, where March 6, after hours, Bloomberg reports that Hims and Novo have settled their legal feud. Instead, in the new deal, Novo will now use Hims and Hers as a primary digital distribution platform for its entire weight loss portfolio, including the new oral Wegovy. Of course, with this reaction, the stock jumps 40% to roughly $22 overnight. Analysts believe the deal provides Hims with regulatory safety that it was missing, while giving Novo access to Hims' 2.5 million subscribers. I can go to udomo.com and I can search Hims stock and see the volatile history of this stock's price action. Hims is basically flat since 2024, going from a high of $68 a share to down to $22 a share. This massive sell-off, because of the legal uncertainties, could serve as a buying opportunity, especially after some light was found at the end of the tunnel. First, we see the top line fundamentals for Hims stock. Overall, the revenue, gross profit, and net income are trending up, which is a good signal for a growing company. HIMS became net income positive in 2024, which is a big milestone. HIMS has proven profitability and is growing to the upside. HIMS is also growing these line items very quickly. We can see the top line growth rates in the next chart. We can see the year-over-year growth rates for revenue, gross profit, and net income. We can zoom in and see HIMS grew revenue 58% year over year in 2025, way faster than the household and personal product industry average. As we continue, we see the balance sheet composition. We can see HIMS cash, assets, current and total liabilities. Below, we have the debt to equity ratio, which has spiked dramatically, surpassing 200% in 2025. HIMS has increased reliance on debt to manage its expansive growth. Hey, got to make money, right? There was the 1.15 billion Eucalyptus acquisition. The single largest driver of the debt spiking was this acquisition, an Australian telehealth giant announced in February 2026. HIMS agreed to a 1.5 billion deal to enter the Australian and Japanese markets. In regards to financing, they paid 240 million in cash up front, but the remaining 700 million is structured as guaranteed deferred payments and earnout liabilities. On a balance sheet, these future obligations are often categorized as long-term debt, which skews the debt to equity to the upside. So from a glance, HIMS seems over-leveraged in debt. And this is why there was so much stress on the stock when the GLP-1 revenue stream almost came to a halt through those lawsuits. There's also aggressive vertical integration happening at HIMS. HIMS spent over 226 million on CapEx. Instead of renting pharmacy space and using third-party suppliers, HIMS is trying to be independent, and they bought their own facilities and high-end compounding equipment. Much of this was financed through equipment leasing and long-term debt to preserve cash on the balance sheet. I would also argue that HIMS is a tech growth phase, which needs to continue the high growth rate to solidify itself as a major player in the medical industry. HIMS is a disruption to the current clunky, non-transparent medical and healthcare industry. Think of Robinhood and SoFi, technology-oriented stocks disrupting their respective industries. The good news is that the debt is overwhelmingly long-term, with JP Morgan financing for Eucalyptus payments spread out through 2029. This prevents a liquidity crunch in the short term. Next, we have the free cash flow graph. Udomo makes it super easy to see how much a company is generating in operating cash flow versus how much is leaving in CapEx. We see historically HIMS free cash flow is choppy because positive free cash flow in 2023. I want to see HIMS maintain this. A way HIMS can do this is vertically integrating and diversifying away from GLP-1s. GLP-1s are the FDA-approved medication mimicking a hormone that regulates blood sugar, slows digestion, and reduces appetite. HIMS is aggressively moving into fulfillment in-house by building their own pharmacies, using their own software to manage prescriptions, which cuts the fees of a middleman. There is margin protection in this. In 2025, their gross margin slipped 79% to 74%. Controlling the supply chain allows them to protect their remaining margins even as they lower prices to compete with Amazon and Eli Lilly. There's also shipping efficiency. They are optimizing the shipping cadence, which is how often they send refills to reduce logistic costs, which was a major drag in cash in late 2025. I'd also want to see diversification away from GLP-1s, as we saw that heavy reliance in that revenue stream cause some panic. A major risk of HIMS cash flow was its heavy reliance on this compound semaglutide. To keep cash flowing regardless of what the FDA or Novo Nordisk does or thinks, they can scale into non-GLP-1 brands. For example, they have men's health, women's health. They have 4hers.com now, which generates over 100 million in annual revenue. The Hers pivot, this brand is approaching 1 billion in revenue on its own, driven by high margins, long-term subscriptions for menopause and healthcare. GLP-1s are not the end game for HIMS, but to deal between HIMS and Novo takes away the legal risk associated with HIMS stock, which can finally allow the stock to run up. The long game for HIMS is becoming the aggregator for health needs. Now that we have reviewed HIMS financials, we can move over to HIMS valuation. Udomo makes it easy and calculates popular valuation ratios like price to sales, price to earnings, and price to free cash flow for you, making your stock analysis that much easier. We can quickly see that HIMS is trading at a significant discount compared to its historic self, currently at 1.7 versus the average of 3. In fact, HIMS is trading at its lowest price to sales ratio in our recorded history. When HIMS was trading below average in 2023, we saw the stock rise from $6 a share to 68. These quick valuation ratios are super helpful, putting value of a stock into perspective. We can compare financial growth rates and value ratios of a stock against the industry average. For example, we can see that HIMS' most recent year-over-year growth in gross profit. I can click on revenue and net income to omit that from the graph, and we're left with gross profit. HIMS' gross profit was 47%, while the industry average was negative 3%. So while the industry average is contracting, HIMS is growing substantially in profits. This does not sound like a stock that should be trading downward in the long run. We want to find stocks growing their fundamentals while trading at a discount, and we can now compare valuation ratios between the stock and the industry average. We can see HIMS price to sales and the industry average price to sales. Now, notice how this drawdown in HIMS stock has caused HIMS valuation to approach back near the industry average. But HIMS is growing much faster than the industry. So why should HIMS trade near the industry average when they are growing faster? Because of the legal risks we experienced. The feud between Novo Nordisk caused fear in this stock. The renewed partnership between these two companies should continue to inflate HIMS stock price back up. In the long term, I personally believe HIMS is a good stock to own for an investor who can stomach the turbulence. HIMS is an aggregator play. Think of Zillow. They are the gatekeeper of housing information. When people want to buy a home, they think of and go to Zillow. Think of Robinhood. They are the gatekeepers to retail investing. Think of SoFi. They are the gatekeepers to student loans and now expanding into other banking products. That is HIMS in the health space. They are the gatekeepers of your health information. They can provide you with recommendations to your health through the data they are collecting through their lab tests. Imagine when HIMS one day partners with Apple Watches or Garmin to collect health information, and that data enables them to better recommend what you should subscribe to. Being the central point of data is valuable. The infrastructure that current medical systems simply do not have. Thank you for watching this video on HIMS stock. Let me know what you think of this partnership between Novo and HIMS. Thank you for watching Udomo. Check out udomo.com for stock analysis tools, API, and solutions. I will see you all in the next one.